Welcome to LeonCo and welcome to your weekly video. Welcome to LeonCo and welcome to your weekly video, and we are continuing our topic. We are very excited to continue our talks about investing. Yes, we've been waiting for this month all year, and we are so excited to share with you guys all the things that we've experienced, all the knowledge that we've gained, and all the things that we are doing right now here in LeonCo in and on investing. So on our last week's video, we gave a brief introduction of all the things that we wanted to discuss throughout the month of December, about the things that we do, suggestions, how do we invest, and all of those things that we are going to share with you guys throughout the month of December. So for our first video, we want to discuss, or we want to share with you guys, something that is very important to us and things that we have discovered and we have shared with all of the people here at LeonCo, and all the things that here on LeonCo, the people that invest, are sort of the rules or the model that we follow when it comes to investing. So the first thing is that when it comes to investing, there is a lot of questions, a lot of maybe interrogatives, insecurities that people have when it comes to investing, and that is, when should I invest? How much money should I start investing? And that is a big question that many people have, and depends on who you ask is the answer that they will give you, especially when it comes how much money should I start investing, or should I have to start investing. Well, it depends on who you ask. Some people will say maybe you need $100,000, $20,000, $10,000, maybe you need $1,000. It all depends on who you ask. But the reality is that we believe that that is something that you should ask yourself first. You should ask yourself, how much money do I have, or how much money am I willing to invest? This could be that you can start with $50 every week, or $50 every month. This could be that you can start, maybe you had $200, $300 in your savings account, and you say, okay, this is the amount that I feel comfortable, that I want to start with. Go ahead with that. Figure out what works for you with a consistent basis, and that is very important, because it depends on who you ask. Many people will have different answers, because some believe that you need a big chunk of money to start investing, or you need X amount of money so you can start investing. And the reality is that you should ask yourself what is comfortable for you, and what is the amount of money that you can have on a weekly, bi-weekly, monthly basis that you are comfortable on investing in, that you think that this is the amount right now that I have, that I can put in a stock market, that I can put in a stock, that I can put in an ETF that will help me create wealth. And that is very important, because we want to share with you guys something that is very important. A lot of people say that, oh, you should wait until you have $1,000, $10,000, $25,000 to start investing. So let's say that you say, okay, I'm gonna wait until I have $25,000 saved up so I can start investing. Well, maybe the amount of time that takes you to make that $25,000 to save that amount is maybe 5 years. Well, you've lost the opportunity to make money for that 5 years just waiting to have that $25,000. So instead of investing your money, making money, having that experience, learning about the stock market hands-on, you've been sitting on the sidelines just piling up this money to then start learning, to then start working on building a portfolio, start investing, and you lost the opportunity to make money. And maybe in those 5 years, you could have built up wealth that exceeded those $25,000. So this is very important when it comes to investing. Figure out what works for you. Figure out the amount of money that you feel comfortable, the amount of money that you can give consistent to your investment portfolio to start building wealth. A lot of people will have different suggestions, a lot of people will have their opinions, but the end result is that at the end of the day, it's what you feel comfortable. The second thing that we want to discuss with you guys is figuring out what type of investor you are going to be. Throughout this couple of months, throughout these couple of weeks, a popular type of investing has become very relevant, and that is being a swing investor. And what is a swing investor? Swing investor is the type of person that invests, and in a short amount of money, they sell their investment to make a profit. Well, here in LeonCo, we are not swing investors. We are long-term investors because we believe on not necessarily making money, we believe on making wealth, and that is very important. We are the type of investors that believe to have a 5, a 10, a 15, 25, or whatsoever time frame you have of type of investing, because we want to create wealth. Creating money is some sort of a second tier objective for us, because if we create wealth, creating money will be something that comes naturally, or something that will come forth because of the wealth. So that is very important for you to figure out what type of investor you want to be. There's nothing wrong with being a swing investor. It's just that we figured out that, and we believe that going in for the long run is more valuable in the long run for us, and that's why we are focused more on being long-term investors. So after these two things that you have figured out, how much money are you willing to start and how much money can you have consistently to invest, and what type of investor you want to be. The third thing is something very personal for us. It's something that we've developed, and we've all here in LeonCo encouraged to the people that we share and the people that invest here in LeonCo, and that is finding out what is your anchor company. And what do we mean with an anchor company? An anchor company is a concept that we developed, a concept that we created, and that is that you're figuring out a company that works for you, a company that you know. What do we mean by this? When you start to invest, or when you're thinking about investing, take your time and figure out what companies do you follow, what companies do you promote, what companies do you buy products that are in the stock market. Figure out what are your daily companies or your daily consumer goods that you use, and figure out if they are in the stock market, and figure out how are they doing in the stock market. This is very important because if you have companies that you already are invested in their products, in their entertainment, in their services as a whole, it will be much easier for you to start investing in them, because you already know the company that you're investing in. You already know their habits, their products, their services, their customers, their line of thinking, because you already know their product, because you are a consumer of them. If you use them on a daily, if you have daily checkups, for example, if you are a person that likes sneakers, if you are a person that is very into shoes and you are very into Nike shoes or into Jordan shoes, maybe investing in Nike could be a possibility for you, because you already know the product. You know how it works. You are one of its customers. You know what is its focal point. This is very important when it comes to investing, you knowing the companies. You can dive into further on companies, learning about their P&L, learning about their earnings, learning about their financial statements. But this is more of a technical standpoint that you should do in the long run. But first of all, when you're starting, look at those companies that you're already investing in. See how much time have they been in the stock market, and see how have they been successful throughout time, if they have sustained time. If they are a company that's been successful for 20 years, 30 years, 50 years is better, because that means that the probability of them being in the market, being in the stock market, being profitable for the next 10, 20 years that you'll be investing in them is probably very high. So you should use those companies. Use the knowledge of the companies that you already know, the companies that you feel comfortable, that you know, that on a daily basis you use them, you look for information, you are up to date on what they're doing, and figure out if that is going to be your anchor company. And why is this very important? When you figure out your anchor company, building your portfolio will be very much a very easy thing for you, because after you get that anchor company, working around and diversifying your portfolio will be much easier. Because if, let's say, you do entertainment sector, well, working out and figuring out where health sectors, technology sectors, entertainment and food sectors, building a portfolio around your anchor company will be much easier, because you will be focused and you will have a clear vision on what you want to do. So this is very important. And if you follow these 3 steps, here in LeonCo we follow these steps, and we encourage people that talk to us to work with us when they start investing to follow these 3 steps. The probability of you being a successful investor and having good returns, building wealth, it's much more precise. It will be much more easier, because you will be consistent on what you do, because you will know and you will be comfortable with the process that you are creating and the process that you are doing. So we are very excited for you guys to come and share this journey with us on December about all things investing. On next week's video, we want to discuss our plans on how we invest, our long-term investing, and want to share with you guys how our portfolio works here in LeonCo and all of those things regarding investing. So we want to encourage you guys to be safe, stay healthy, and always remember to have that king mentality.